10 stocks you should buy during quarantine. The 2020 coronavirus originating from Wuhan in China has devastated the global economy and destroyed financial lives around the world. A recession is now a reality for many nations and a depression around the corner. But during times like these, shrewd moves in the stock market can really pay off. In anticipation of a recovery. Choose the right kind of stocks in quarantine and you could really benefit from the inevitable economic upturn once the world and the stock market start to recover. We're going to look at 10 stocks to buy during quarantine, those which are either profiting from lockdown or are most likely to recover from it. Remember, you can support the 9to5 Rebel by liking this video and also by subscribing to our channel, where you'll get more tips on how to escape the rat race. But for now, let's continue our look at the top stocks to buy during quarantine. Alphabet, Google, is the parent company of Google, and its stock took a downturn from highs of recent years. But as people during lockdown are more likely to use Google Search, YouTube, and other Alphabet-owned apps, this is boosting the company's business. Alphabet is in a rock-solid position to weather any temporary lockdown storm. Its cash stockpile stood at nearly $120 billion at the end of 2019. Alphabet is also likely to generate gains in the future. Its cloud business continues to grow, and Google and YouTube remain the leaders in search and should command higher advertising rates in the future. Alphabet-owned Waymo recently raised $2.25 billion in outside cash and is set to be a major player in the self-driving car market, which is likely to explode within the next few years. Buying Alphabet at a discount right now seems to make sense. Home improvement stores such as the Home Depot, HD, are another wise investment. As a shorter-term focus, investors would be wise to consider how certain shops might be able to function while lockdown restrictions are still in place, but start to ease. Some retail chains benefit from having large stores, which will make it a lot easier to keep up social distancing measures, as there is space to move around, or the ability to rework the store layout. UK-based DIY chains like Wix, owned by Travis Perkins, generally have large-sized stores, and they should see sustained demand going into 2021. In general, DIY or home improvement stores are a wise investment for the future. The more time spent at home, either through lockdown measures or ongoing remote working, will focus people's attention more on their current surroundings and maybe encourage them to make their home look nicer. Telecom companies like AT&T are looking to profit from an increased use of their services during quarantine measures and will increase their stock price in the process. More emphasis on communication through social distancing, such as phone and video calls, means people are more likely to invest in their communications infrastructure. US-based telecom giant AT&T is a good bet when it comes to investment in this field. Despite recent poor investments, AT&T is still a solid business that should continue to generate strong, steady cash flows through the coronavirus recession. And even with the struggles of a declining pay TV business, the market has more than adequately discounted AT&T's stock. It's down from a 5-year high, and the dividend yield of 6.6% at recent prices is very generous and should prove well within the company's ability to maintain. Continuing our list of top stock options, and we move to the energy field. NextEra Energy, NEE, is the stock we've identified here as a wise investment. Energy is likely to be sustained throughout the COVID-induced struggles due to demand from customers, and is also likely to be a big player in recovery. With its stock price up almost 30% over the past year, NextEra Energy may not seem like a bargain. But this company, which is the largest electric utility in the US and one of the biggest in the world, is worth buying at recent prices. But what really makes NextEra worth buying is its long-term prospects. Not only is it one of the best-run utilities in the world, it has made renewable energy and lower-cost natural gas a big part of its growth plans. NextEra Energy has been a market-beating stock for many years. Its future prospects and track record make it worth buying today, while it's cheaper than usual. Back to the tech sector now, and giant Microsoft, MSFT, is our next stock we think you should move for. One of the largest tech companies should have thrived through the crisis, and its products and services are likely to remain in demand for years to come. Its sources of income can be split into as many as 9 categories, with roughly 3 overarching segments: productivity and business processes through Microsoft Office, Dynamics, and LinkedIn; personal computing through Windows and Xbox; and the cloud using Azure and SQL. A significant increase in companies telling staff to work from home will require significant investment in exactly the solutions that Microsoft provides, such as its Teams communication platform. The Trade Desk Inc. (TDD) is a global technology company that markets a software platform used by digital ad buyers to purchase data-driven digital advertising campaigns across various ad formats and devices. After its shares became cheaper during COVID, this is now a wise move, as it's likely to recover. Its shares have been hammered hard by the coronavirus market crash, plunging more than 40%. Although the COVID-19 outbreak should bring both positives and negatives for the company, if advertisers reduce their ad buys, it will mean less revenue for the Trade Desk. However, connected TV is the biggest growth driver for the Trade Desk. CEO Jeff Green predicted that we're in the middle of a once-in-a-lifetime consumer shift to connected devices and streaming content. That consumer shift is being turbocharged by the coronavirus crisis as people are cooped up in their homes. CTV is likely to become a lot bigger over the next few years. So will programmatic advertising, buying and selling. The Trade Desk is poised to benefit from both trends. Coronavirus has accelerated the boom in some industries that were doing well before lockdown. That's why stocks like Amazon, AMZN, are a wise investment right now. For example, online shopping or digital commerce was already thriving long before any of us have heard of coronavirus, and the crisis has only sped up that switch from stores to clicks. The lockdown has encouraged more people to try online shopping and/or become more dependent on it. For example, if you look at how supermarkets have been swamped with demand for their online services, doing the big weekly shop via the internet could become the new norm. Investors can look at the digital commerce area from many different angles. You can consider a range of retail and electronic payments giants like Amazon, Alibaba, eBay, Shopify, Visa, MasterCard, and PayPal. When choosing how best to manage your assets at a time like this, it's worth thinking of companies whose product is to manage assets themselves. Brookfield Asset Management, BAM, is one of the world's biggest alternative asset managers, with holdings in real estate, infrastructure, energy, and others. Buying shares in them now is a good tip. It manages over $500 billion in assets for institutional, sovereign, and high-wealth clients. It has tremendous liquidity that it can use in market downturns and economic recessions, when high-quality assets can be acquired for discounted prices. Its own shares are discounted right now from the 2020 high, erasing almost all of its gains over the past year. If you're looking for an opportunistic investment in a business that's built to profit from economic uncertainty, Brookfield Asset Management should be on your list. Just 2 more stock tips to go now, starting with transport. Although traveling has been reduced significantly during lockdown, there are some winners from the current climate. In the UK, for example, meaning Halfords, HLFDF, are our tip in the UK stock market. The UK government has designated bicycle and car maintenance company Halfords as an essential services provider. Business has been good since lockdown, as more customers have taken the opportunity to include cycling as part of their daily exercise, as roads have become quieter and safer to ride. Advice by Prime Minister Boris Johnson in May to avoid public transport will only fuel more demand for bikes and push more business to Halfords. Halfords is also well-placed to benefit from growth in electric bikes. It offers some of the best value e-bikes on the market and is a natural place for people to shop. Our final stock tip for quarantine is an industry that does well in all environments, not just in these unprecedented times: pharmaceuticals. Vertex Pharmaceuticals, VRTX, are our last big tip for investment. Their modest stock drop this year makes it one of the better performing stocks on the market. Like many biotech stocks, Vertex shouldn't be impacted by the coronavirus pandemic. The company sells cystic fibrosis drugs, the only ones on the market that address the underlying cause of the genetic disease. Vertex's revenue is likely to soar this year. First of all, the company secured key reimbursement deals for its cystic fibrosis drugs in several countries that will open up more access. Second, Vertex should soon win European approval for its new cystic fibrosis drug, Trikafta, which will almost certainly become its biggest selling drug thus far. Over the long term, Vertex could very well become a big player in several other therapeutic categories, including a potential cure for type 1 diabetes, thanks to its acquisition last year of Sema Therapeutics. The only lockdown when it comes to Vertex should be growing profits. So there are the 10 stocks that you should invest in during quarantine. They're all in sectors that are likely to profit from consumer behavior during these times, or will be a big part of what life will look like post-lockdown. Be sure to take advantage of free stocks using Robinhood or Webbull. Pioneers in the commission-free trading, on the link below. Which stocks do you think you'll invest in? Are there other sectors you think will profit that we haven't included? Let us know in the comments. To support us, please like this video and subscribe if you want to see more on how to escape the 9 to 5. Thanks for watching.